Well, top of the morning to you, Alice Lima, Pete Belcastro. Welcome to the Real Estate Show. We're both brokers here at John L. Scott in Southern Oregon, and we're here with the only weekly radio show discussing housing, Southern Oregon, lending, investing, tenants. We have a lot to talk about with another strange week in real estate land here in Southern Oregon. Pete, how are you doing?
Yeah, doing fine. 600 plus shows over 12 years, and we've never lost anything to talk about. There's so on all the time, and it changes from week to week. But this is a crazy week. This is Labor Day weekend that we're in right now, which is traditionally a very exciting time for so many of us. It's football season's back. The Beavers and Ducks are going on. High school football's back. School's back in session. People are excited about the year. I don't know about you. It doesn't feel that way to me this year. It feels, I don't even know how to describe it, but mandates and masks and schools and people are divided over this thing, Alice, and emotions are taking place. Businesses are being forced to do things that they don't want to do. And it's just a mess in so many areas. And yet real estate continues to do well. It continues to sell, and not as much. We've had a great change. It's slowed down. Listings are down this week. Pending sales are down this week. Closed sales are down this week in Jackson County across the board. Days in the market are up. We know that. So the market is definitely in the beginning of the fall trajectory downward, which it does every year. Today, we're going to talk with Guy Giles of Mutual of Omaha Mortgage about what that means for lenders and what that means for buyers getting lending to be able to do this correctly and do it well and do it first and be successful.
And it's going to be another opportunity, I think, for a lot of our sellers that did not get on the market this last summer or last year. It's an unexpected shortage again, an unexpected shortage for people reacting to this second wave of COVID and our medical facilities being kind of full. I think that's given people pause. But again, every time we have a chaotic or uncertain situation, it does create opportunity. And you can see by the numbers, Pete, you just said it, the numbers are down because of inventory. So this creates opportunity for sellers. If you want to get out there, you probably won't have very much competition.
It's the same in business in general. Try to supply chain. Oh, I mean, businesses are really suffering in a lot of ways. There's not enough workers and things like that. So it all affects real estate. And we're going to explore that today and see where it's taking us as we begin now we're going to slip into the fall selling season here now, and we'll see how it takes us. And we'll find that journey beginning today.
Well, and Guy Giles, Pete Belcastro, Alice Lima, we'll be right back after a word from our sponsors. Don't go away. Well, welcome back to the Real Estate Show, folks. I'm Alice Lima here with my co-host, Pete Belcastro. We're both real estate brokers here in Southern Oregon with John L. Scott. And today we get to speak with Guy Giles, one of our sponsors, Mutual of Omaha Mortgage, talking about what he has watched occur in last few weeks. Welcome back, Guy.
Hey, thanks. It's good to be, I guess, out of the smoke. Seems to be feeling like fall out there a little bit. So I think we're going to at least move towards a little bit nicer outside. I don't know. It's I'm glad to be back. I glanced outside and lost my train of thought.
Well, look, Guy, the temperature hit in the 30s over here the other day. So maybe this is before Labor Day. So maybe it's a sign that fall is going to come quickly, that we can get the fires out faster, maybe get some wet weather in here, because that's what we're really all praying for more than anything else, I think, as we go into the fall. It's a crazy time, isn't it? Tell me what's going on. Tell us what's going on in the mortgage world. When we talked about a month ago, we were all predicting all sorts of things, and yet nothing's changed. What's happened in the last month in the mortgage world that you go into every day?
Well, really, I mean, the only thing that's really changed is we're still struggling with investments in second homes. I think I mentioned it a while back that Fannie Mae and Freddie Mac are only allowing servicers, meaning the guys that collect the bills for them, to have about 7% of their portfolio be investments or second homes. Consequently, everybody got really careful about how they loan on those. So it's just it's been tough because the government sponsored entities don't really don't really want them. And it feels a little bit kind of like a move, from the government to let everybody have an owner occupied one, I guess. So that's been the only real change, all the investments that I do. It just got a little bit more difficult for them. It's still, if you look overall, historically, it's still not a bad time to buy an investment property because they used to be a lot more expensive than they are right now. But I think we're a little bit spoiled with these low rates over the last couple of years.
So if I wanted to buy a second home right now, a vacation home or something like that somewhere, this is the area that you're talking about. So what do I have to do to be able to do that? What does someone have to do?
Well, I mean, the criteria hasn't changed a ton. One of the things that they kind of tightened up on was if you don't own a primary residence, they won't allow you to buy an investment property. I have some successful kids that have been living at home, believe it or not, and buying some investment properties over the last 6 or 7 years. And now they're living in apartments and they own some investment properties, and new girlfriend wanted to buy one. And it was pretty much a no-go that way.
So you're
they did allow one of the guys. What's that?
So you're saying that it has to be, if you can buy an investment property as your first one, but it has to be owner occupied. Is that what you're saying?
No.
Well, no, you actually have to own a primary residence. So because she was living at home, they wouldn't allow her to do it. One of the guys that did own an investment property already, he was allowed to do it, but I still had to go through kind of what we call our non-QM channels, meaning that it wasn't the Fannie Mae, Freddie Mac stuff. So that's gotten a little bit weird. I mean, it's not I know, Alice, that you're one of the best people around that sells a lot of investment stuff. So, I mean, for the rest of us, it's not the biggest part of our market, but that was, one of the biggest changes that I've seen. The Fed, this last week he talked, and, as far as changes go, he said that a lot of this inflation he believes is transitory, meaning it's just for a little while, kind of like what I was speaking to a while back, everybody out spending the stimulus money. Every time they talk, they're talking about backing out a little bit of the mortgage-backed securities that they've been buying. They buy about, $40 billion a month. If you really look at the numbers, it's closer to 100 million that they're actually buying, but they're rebuying the stuff that gets sold off, that gets refinanced and things like that. So a lot of what we hear as far as they're going to back off on them, and that's going to cause the rates to rise up. You're talking about a portion of that 40 billion, but that doesn't really account for the other 60. Hopefully this is kind of making some sense, but realistically, them backing off isn't going to affect the rates as bad as some people had thought in the past. So I do expect rates to raise at some point, but I just don't think we're there with inflation. That's really their function, is to watch inflation. And even though everybody sees it in the store right now, everybody sees it at the gas pump, I do think it is kind of transitory. I mean, it's not going to happen forever, at least at this pace. So I think we're going to have decent rates for a little while still, I guess, is the bottom line.
So one of the areas of interest right now is the sellers putting their house on the market. Have you seen any slowdown of people coming in to write offers, or is that slowing down because there's just not enough on the market?
I've definitely in the last few weeks seen a slowdown, but I think it's changed a little bit. It doesn't feel like there are 1,000 people running around, just in a frenzy to get a house. And then it feels more like there's 100 of them running around, but they're all very, very serious. So my conversion rate is probably close to 100% right now. It's really, really strange. I don't have just a whole bunch of people looking for houses at this point. I'll get, a few referrals a week, and people will actually get into contract. So it's just different. I'm not dealing with as many people, but the quality of the people that I'm dealing with are really ready to go and still really ready to make a strong offer.
And do you guys?
That's kind of what I'm seeing.
Do you guys know that in terms of the listings in Jackson County, We do this every week. Last week, 2 weeks ago, there were 468 of those stick-built listings available. This last week, that dropped to 407.
Wow.
And it's not like we're at the end of the month. A lot of contracts come up at the end of the month, by the way, so that may have something to do with it. But that dropped quite a bit for the first drop. It had been climbing up a little bit, every week. Yeah, went down by quite a bit.
So do you think that this is our what used to be normal cycle? We'd have a little bit of a change when school started. I'm just trying to decide, is this in reaction to the second mask mandate and all the turmoil in the world that there's a little bit of a slowdown, or is this, like Pete, you like to say, the 6 cycles? Is this just one of the normal cycles? What do you think?
No, I don't think so anymore. The cycles have kind of seemed to be this whole thing has changed so much because of what school's doing. I'm thinking maybe these things, people have decided, okay, school's going to start again. We got it straight. We're stopping. We're going to pull them off the market right now, and we're going to stay put again. Maybe we're going to see that happen like we saw last year. I'm not sure, Alice. No one really knows. That's what's so weird about it, Guy, is that we're in such uncertain times. Everything around the market that we deal with, everything around us just seems like it's upside down.
It does, and then, you talk about your cycles, and then we have to add the new, smoke season into our life from now on. It looks like I don't know. It's kind of like fall, and right before fall we have smoke now. So I think everything kind of changed. But I think what's going to really keep driving our market is I still see more and more people that are able to work remote. I'm having them move here from different places. So I do believe there's a little bit of a slowdown. I mean, obviously when school gets back in, people don't like to move their kids around during that time. So I think that is definitely part of it. People are trying to see where this thing's going to land with, now that the Supreme Court has ruled that it's, you can't have these memorandums forever, where, at some point someone's going to have to start paying their rent. I haven't really done the research, to be honest, to see what our lovely governor has done to, fix or not fix that at all. But really, I think it just boils down to, there's still uncertainty, like you said. There's people wondering, are things going to tighten down? Is this really short lived? Is it going to kind of loosen back up? Which is my feelings on the thing. But we are dealing with people going back to school. We were at such an expensive place and everybody felt that. And I did see a lot of people coming in here just saying, we're at the top right now, and it has to come down a little bit. So I think that there are some buyers out there that are just kind of thinking, hey, we're going to wait this out just a little bit and see if I get any kind of a reduction, or at least maybe get $3 of my closing costs paid for by a seller.
Well, and I think if we had, that was funny, if we had continued our normal process of recovering from the shutdowns and not had the second mask mandate, and I'm not being political or saying right or wrong, I'm just being observant and saying that when we have these additional overlays from the government, then it starts to slow people's behavior down. But again, all of this creates opportunity. And I really cannot stress enough that I feel like we have a second chance here for people to sell their house in an environment where there's hardly any competition again, when we were well prepared to have a real tsunami of listings come on the market. And now that seems to be kind of slowed down. So I still think there's a great opportunity.
And Alice, you're absolutely right. And you talk about the cycles. I'm sorry I didn't, because that Labor Day was always where that cycle tipped over, and we started seeing a lessening of fewer listings come in all the way through winter. Remember, that's right. How that cycle goes. And it backed it up here because we're down quite a bit now as we go into the Labor Day and school has started. We're already seeing that. But what makes it so hard, and you're absolutely right about, now is the time to sell it, because we're already starting the downward cycle with little inventory. Remember last year we had 600.
Oh, right.
Now we're at 400. So we're starting 200 down. And again, you always have to look at where the listings are coming from. We still had 85 of those 400 or luxury homes. That's down from last week's, you see. So I think we're starting, you're right, though. We're starting, it's a great time to sell but we're starting from a lower position than we even did a year ago with fewer listings.
And this was not predicted because we weren't really seeing another kind of mini shutdown, a huge, the uptick that we had in the COVID cases in our area was really, really high. I just don't think any of us were ready for that. So, I mean, we all figured there'd be some kind of something that happened, but now that it's here and it's in full force, again, it creates an opportunity. If you're willing to put your house on the market, boy, you will have hardly any competition, especially if you're under that $800,000 mark. You'll sell fast and you'll probably get really, really good offers.
But remember, where do you go to find the replacement property, or where do you go? Many of our people doing exactly what you're doing, they're leaving. They're not coming replacement property. They're not moving within our community. They're leaving our community in many.
Or they're finding some temporary something so they can get out while the getting's good and then get another place at their leisure. Yeah.
Good. Hey, try to find a rental. There you go.
Well, yeah, we'll have to talk about that too.
That's a whole other story.
So, okay. Well, we're talking to Guy Giles, Mutual of Omaha Mortgage, one of our sponsors, Pete Belcastro, Alice Lima. We'll be right back after a word from our other sponsors, Rogue Valley Association Realtors and John L. Scott here in Southern Oregon. We'll be right back. Well, welcome back to the Real Estate Show. Alice Lima and Pete Belcastro, your hosts here today. We're both brokers. John L. Scott here in Southern Oregon, and we're having a great conversation with Guy Giles, Mutual of Omaha Mortgage, who's also one of our sponsors. And Guy, right before the break, we were kind of starting to talk a little bit about tenants and the laws and how that affects landlords. And you had another quick point you wanted to make.
Yeah, the main thing I was talking about, I really do believe that our governor is trying to do what she thinks is the best to keep everybody safe with the mask mandates. I was speaking more towards the I could stay in my house forever if I don't pay my rent piece of the thing, which kind of got struck down by the Supreme Court. So I guess we'll kind of see where that one lands. I was thinking that, maybe that could open up a few rentals here and there if people feel like they can move around on that. So I'm just seeing people that are going to sell their house, and we end up kind of getting all the way to that point, and then for one reason or another they're deciding to rent it out just because rents are so high right now. So that's something that literally just happened yesterday with a buddy of mine, and he had all intent to sell his house, and the next thing you know, he said, hey, I'm coming in with 15% down instead of 30% down. What do the numbers look like? And by the time he factored in the rents that he's getting for the house, it just made more sense for him to rent the thing out. And now he has, another big asset that's appreciating for him. Plus he's, getting, when it's all said and done, he's in a new house and he's really not paying any more than he was for his old house.
Wow. And so I don't think this is so good that you brought this up, because people don't realize you can change your mind in mid application and do a different direction in situations like this, but you have to explain to your lender what you want to do. And then Guy, can you kind of tell people the mechanics if you do want to keep your house? How does that work if you want to use it as a rental and still buy something else?
Yeah, we will. We'll basically give you 75% of the rent. So if you're going to rent it for $1,000 a month, we give you about $750 credit for it. The good part is that so many people are in their house that have been there for a while, and rents have gone up so much that even though you lose a little bit on that occupancy factor that we have to use while qualifying you, it's still penciling out to where people are making money every month. And to be honest, even if they're breaking even or losing $100 a month, the appreciation and what you can do with your CPA with an investment property it actually pencils out pretty well a lot of the time.
Well, and you have somebody else buying you a house, which if you're a tenant, listen up, don't do that. Buy your own house.
Yeah, I mean, and our Chinoa fund, our 100% financing, that we can fit in for anybody. It comes with a second mortgage, and if you are under the median income, that second does not have to be paid back, and if you're over it, it does. But it's a program that I hadn't looked at for a couple of years, because it did get weird right at the start of COVID. But some of these programs are coming back around where they are actually viable options, other than maybe USDA, where the only place you can live is 3 blocks out of Butte Falls or something. So there are some good things going on.
Well, and actually the USDA area is bigger than that, but that's kind of funny because it is hard to find property, isn't it, Pete, in the USDA category?
Well, it's not, the area is a lot. It's only the urban areas of Medford, Central Point, and Grants Pass really that are restricted in USDA loans. The problem is that sellers don't want USDA loans. They want a conventional loan from Guy and not a USDA. When we started this show back in 2009, if it was not for USDA loans, towns like Roseburg, Grants Pass, Klamath Falls would have fallen off the maps, because that was the only kind of lending that was even selling anything back in 2009 and 2010. So USDA has fallen like a rock, and no one even uses it anymore. Guy would have to go out in at that point to find
if you're talking about an income limit, and I apologize, it kind of broke up a little bit, so I'm having trouble tracking. If you're asking me what the income is, I mean, if you have a few people in your household, you could be up over $90,000 a year. So it has gone up. It is probably the most conservative program out there as far as debt to income ratios. Consequently, their default rate isn't bad. I would think that, that the sellers, probably their apprehension with accepting a USDA offer it's under some of the same guidelines as the FHA and the VA, as far as you have a little bit of feeling pain, then all of a sudden, you might run into trouble and delay your closing and set a domino effect that you don't want to do. But that's usually the downfall with the USDA one.
Well, and also they don't, correct me if I'm wrong, they don't lend on manufactured construction on land, which is kind of popular in our rural.
Yeah, they have made some changes where they are allowing some manufactured housing. I think one of the problems that you run into with the USDA, though, is if you have an outbuilding, which you tend to have when you have rural property, they will take the value of that outbuilding right out of the appraisal. And I actually lost a deal on one of those a couple of years back, where it had a decent barn on it, and the house appraised just fine with the barn. And then the appraiser had to back out what that barn was worth. And at that point, the house did not appraise. So there's just some little nuances with the thing, having to do with how many people are in your house, as far as the income limits go, do any of them have any income? And so it's just this weird formula, but that was one of those weird little ones with the outbuildings that you have to be really careful of. The idea, I think, for the USDA, even though the name always sounded to me like, you're going to go live next door to a bunch of cows or something. I think it was really designed for small towns.
Yeah, absolutely.
Than rural properties. Yeah, there's actually one other thing that can really help. I mean, a lot of what we've been talking about is low inventory, and just a lot going on in the market. One thing that we're doing, just to kind of get away from that other subject a little bit, is full credit pre-approvals. I'm finding that my conversion rate is a lot higher right now, and I think a lot of that has to do with the minute I meet somebody, we're acting like they are in contract. So while they're looking for a house, my turn times are a day, 2 days at the most, where we're fully credit underwriting everybody that comes in. So instead of just the pre-approval letter, we have a signed off from an underwriter, the same underwriter that will underwrite when they get their house. So being able to send out letters and call agents and tell people that these guys truly are ready to go, I think that might be, kind of a nice thing to set people apart, because it's, I thought it would be good when we started it, and it's actually really helped get offers accepted in this crazy market.
Well, and real estate agents, I think, need that. We talk a lot about how the consumer needs to be able to count on the lender, but real estate agents need to as well, because you don't want to be having things go wrong in the middle of your escrow because the lender wasn't thorough. That's a really bad situation, especially in a market like this.
No, and in the old days, a lot of times there was just so much of everything. You just go take your backup offer, but there's a lot going on. You're trying to sell your house or rent it out or do whatever you're going to do with it, and everybody has plans, and it's not as simple as, oh, let's just extend this escrow a little bit because the borrower didn't want their credit pulled before we started this process. And we're just animate with everybody that we're gonna get everything done, and I'm putting my name and reputation and my company's name and reputation on this pre-qualification letter, and now I'm putting it on a pre-approval letter. So barring something going crazy in the middle of the transaction, everybody's already looked at this thing. So really, all you're waiting on is your appraisal, and as long as your inspection period and your appraisal go okay, you're ready to close. And I closed a jumbo loan in 3 weeks last week because we were ready to go, and we had everybody underwritten. I did call in a little bit of a favor on an appraiser to get the appraisal back really quick, because that's, that could potentially be a holdup sometimes. But it's a good feeling all the way around for everybody to know that they are approved, not just, you put in some numbers in Quicken Loans and they said you are.
I think that's one of the best things that Mutual of Omaha you've got done, Guy, is to have that program. It's perfect for so many buyers. And I really do think buyers need to look at that, because it gives you a little bit of an advantage over the competition who's you're up against in many of these sales that we see. So that's a brilliant way to do it. And I think you're going to be really successful with that, obviously. The other one that you've also done, which I think is still in play, if I could purchase my new home without a contingent offer on my current home. And you have some of those loans as well. And well, those are really two huge things for consumers, for buyers, to really get an advantage over the competition, I think.
Yeah, every just kind of every little thing that you can do to set yourself apart is a good thing, because I think the days of even writing a letter are kind of over around here, aren't they? First date. So I mean, that would break my heart if somebody literally did not accept the offer, for bad reasons. But it was kind of nice to just be able to say, especially when somebody'd come in excited after seeing a house, and they would just, I'd say, write a letter and tell them how much you loved that front room. But yeah, that's not going to happen anymore.
Yeah, and that's actually illegal now in the state of Oregon. This is a brand new law. What he's talking about, everybody listening, do not. And you know what else? You're not, as an agent, really supposed to say much, even verbally now. You have to be super careful about explaining who the people are and why they want your house. And it's just a little bit, yeah, they just want to know what the offer is.
Yeah.
Yeah, and it probably should just come down to numbers, because it is a business transaction, so it's probably not a bad thing. And again, any little thing we can do to just make the playing field fair, and I don't know.
Yeah, and it's all about discrimination and possible perceived discrimination. So that's what that law was all about. No love letters.
No,
we had the Oregon Association of Realtor lobbyists on with us a few weeks ago, and we learned a lot about what went on in the legislatures, some of these decisions and things. And thank goodness that they're there up in Salem, because they kind of more or less can keep the train on the tracks in terms of lending and all these kinds of things, and buying and selling and real estate stuff, because they can go off the tracks in a minute, and things are really messed up then.
It is easy when you're trying to legislate everything, and then all of a sudden something that sounds really good on the surface on the real estate side, hey, let's just go make that a law. But you're right, to have some people up there, lobbyist is a bad word and has been for a long time, but people that do really understand, that can get the ear of the people there and say, look, this might sound really good on the surface, but But in the long run, there are other ramifications, or you're actually going to hurt this. And it is good to have people like you're talking about, Greg, probably.
Well, we've got a break coming up. Guy Giles, Mutual of Omaha Mortgage, will be right back. Well, here we are again, a real estate show brought to you by John L. Scott here in Southern Oregon, Mutual of Omaha Mortgage, Guy Giles, who's with us today, and Rogue Valley Association of Realtors, Pete Belcastro, Alice Lima. We're both brokers here at John L. Scott. And Pete and Guy and I were just talking about how to get offers accepted and some things you can do to be a stronger buyer on paper, and some statistics. Pete, what else do we have to talk about for the last few weeks in our valley?
I want to ask Guy just one question here before we do that. What about, are you seeing any of your loans regarding fire insurance that is changing? Because the whole West, is burning. So many homes again have burned. Look at South Lake Tahoe, close to there. We've lost them in these fires in Oregon. Are you seeing any changes in that, Guy, in terms of fire insurances, premiums going up, or what's happening in that end for people who are getting loans right now?
Well, it was kind of strange. It felt like it was going to start to be a big deal a little while back, fires and everything happened. And I'm not seeing crazy premiums at all. And to be honest, it fell off my radar a little bit, because we were definitely starting to see it. And I would hear that this insurance company doesn't want to insure in a certain area. And it really hasn't come up for me a lot lately.
Okay.
So,
well, that's news. I'm glad to hear that, because I'm like you. A month ago, it seemed like it's going to go crazy, and maybe that's a good thing. As far as the market goes, and this is what's so interesting in Jackson County, Alice, you talk about the cycles of the selling season, and usually Labor Day, which is a holiday, of course, that we're in this weekend, is usually the time when we start to see listings go down, and we start heading into winter, which is the low point of the real estate market of the year. And it looked like it's following our way. 2 weeks, just as an example, 2 weeks ago in Jackson County, we had 468 stick-built homes on the market, 468. This last week, it had dropped to 407. And it wasn't that we had all sorts of new pendings and closed sales happen. I think it was went off the market, whatever. But Jackson County, the reason the market has changed, 2 weeks ago, we had 104 homes go pending. This last week, we had 55. It was half from the previous week. Closed sales, 2 weeks ago, we had 86. This last week, there were, let me get it right, there were 61. So we're seeing a slowdown. Days in the market have increased from 45 2 weeks ago to 58 last week. So things are beginning to change a little bit as we go into the fall right now.
Well, and it feels like we're going backwards. What did you say the other week, Pete? Was almost like we were starting in March 2020 again. And that's how this second slowdown feels. And I'm still on the fence of if it's oriented to the season or if it's having to do with people just putting the brakes on about moving because of the increase in the COVID.
I don't know, but the COVID has certainly made a big deal out of what we're doing with schools, and people are not, if they're stopping to move. Anyway, we'll keep watching it, week after week as we go along here to see how this goes, but we've definitely seen a change. And so that change also means that the prices have not gone down. I think that's the other thing. The median price last week was $526,000 for those 61 homes that sold. It's been over 1,000 for 3 of the last 4 weeks of August. Just in county. So affordability and all those things are still out there and playing, and that's why the opportunity that Guy is telling us about, with rates the way they are, with opportunities to be fully vetted for closing and things like that, that's really an opportunity that buyers need to work on. And I guess I don't know how much time we have left, Alice, but hey, Guy, you've been with us. How long has Mutual of Omaha? I know you started with different companies, but how long have we been doing this show together? It's been what, 5 years?
At least. It's been a long time. I'm glad I finally landed at a company that didn't close down, because it seemed like every now and then, thankfully, this company's been around for a long, long time, and everything's still going strong here.
Yeah, well, mortgage companies were like airlines and banks. They were coming and going as they were. But you certainly landed with the best one, at least since I've known you in doing the show with you with Mutual of Omaha Mortgage. And so that's really good. It's also, I'm at that age where I'm with the retirement age, and this may be our last show together, as far as I know, because
What?
I'm hiring, from the work from this. But it's been wonderful with you. I've learned so much about lending from you. I know our listeners and viewers have too, and your great insights into how to do it right and how to get the best opportunity for you as the lender for your client. And I've learned that a lot from you, and I think you really do a great job with that. You've helped me personally, I know, in a number of things, and it's worked out great. And I really appreciate all the help that you've given and all the effort to be on our show for so long.
Well, I appreciate everything about you. My first show was your last live show, where people could actually call in and ask questions. And I fought a bunch of Marines one night, and I was less scared at that moment than going on the air with you. And you guys were so comfortable. I lost that fight, by the way, but literally, man, it's been a real blessing to be with you, buddy.
Well, thank you. Appreciate that. And you carry on, and we keep selling houses, and we have to build more houses. We need more for people who, especially in rural communities where housing is so short. This issue isn't going to go away. And you guys, you and Alice and people like you who keep working in the business have got to keep bringing these issues up to the people who make these decisions, because our housing situation is really, really critical, and rentals and everything. And it's not gotten better in the 12 years of doing this show. It's gotten worse, to be honest.
Yeah, maybe a little bit of this, it looks like you can do a little bit of an ADU on some rural land now, up to 900 square feet or something. Maybe that'll get a little bit of relief. I don't think you can really rent those things out, but maybe you can stick your kids out in that instead of inside your house.
Well, it would be nice for the elders too, to have them close by and still, have their own space if they're capable of living like that.
Absolutely.
I want to come back in another life. I'd come back as a builder, and I would build almost in rural communities, because you tell them, if the migration that we're seeing from the cities to Oregon, to Idaho, et cetera, small towns, there's just no housing in the small town, new housing in small towns. So that's where the critical need, because people want that rural life, and we just don't have it available right now anywhere where we're at.
Unless everybody puts their house on the market. Or at least a third of you put your house on the market, then we'll be able to make it happen.
And if Pete's retiring, then at least give Alice a call to find out what your house is worth. It's pretty enlightening. And if nothing else, you're going to go to sleep feeling pretty good.
Yeah, it's been an interesting market. And just so that the listeners don't worry, Pete is we're in conversations with him to keep him coming back as a consultant, giving us his opinion from time to time. But
you're fine. The market isn't going to change, and I think opportunities still exist for that. I've learned that. I'm still out there trying to find stuff and work and do different things. But yeah, it's quite a market. I can't wait to see what September is going to do now with school starting, football's back, and all the things we talked about at the beginning of the show. How is it going to affect real estate? We're going to find out the next few weeks, really, what the fall might look like.
Well, Pete Belcastro, thank you so much for all your years. And we are going to hit you up for consultation on a regular basis. Guy Giles, Mutual of Omaha, one of our sponsors. Thank you for all the great information today. Also, the Rogue Valley Association of Realtors and John L. Scott, Southern Oregon, both sponsors for us. We're very grateful. And this program will air again tomorrow at 6 o'clock. Have a beautiful Southern Oregon weekend, and we'll see you next week. Bye now.